Another crazy day in the markets, guys, with S&P 500 dropping. I don't even know, like 3.5%, 4%, something like that. They just don't take a break. Well, welcome to Elliott Wave Cafe. I am your host, the Cowboy. This is the chart of the day. Let's get started. All right, so yeah, we did sell off a little bit more. They opened them weekly. They opened them week on the futures last night, and they just did not let them breathe at all today. We closed near the lows, but I think we're into some extreme levels in here, and the market is due for a reaction upwards. I could be wrong here. There could be a big meltdown coming, but it does look like we're pushing some heavy levels to the downside. I think even in terms of count in here, we start to see, more of a clear 5-wave decline. So, I'm gonna keep at it and think that, we're near the end of this, flush to the downside, and we're probably going to get a little bit of a recovery higher. But you got to be careful. You got to, pick your battles in here and just kind of stay small. Trade very light if you can. Don't use leverage. Just watch the markets and analyze sentiment in here. And, there is really not a lot of places to hide other than cash. The markets have been, hammered down here quite aggressively, and they seem to be continuing to do so here in the month of May. So, we're at the beginning of the month. We can probably find lows for this month into these sell-offs. We're towards a, 50% retracement, between 38 and 50% on 4v3. If this continues to be a fourth wave, my alternate is a second wave in here that could be fairly small. So we could still continue to kind of guide ourselves lower. But, until price starts to show us something, that's more encouraging, it's really, really tough to, to press that narrative. But, again, there's a bunch of indicators here that are flashing, extreme levels, and I'm going to kind of walk you through them, and we'll see what in which way they kind of resolve moving forward. So let's jump over and take a look at the risk on, risk off indicator. This one, it's at some extreme sell-off levels in here since we've seen in 2019. This was actually at the end of 2018 when Fed actually stopped raising rates and they reversed course in there. This is at the beginning at the pandemic lows in here again in 2020 in March. You're looking back in 2016 when we had a couple of larger corrections in here. And this is exactly where we are at the moment. So we're really, really pressing the downside in here, through this risk on, risk off indicator. That's basically a combination of a lot of, risk on, risk off, smaller indicators that kind of get in and build this kind of larger one. But this one, it's flashing some extreme levels in here. If we're going to get into a much larger decline and become a bigger bear market, I assume that this thing could kind of move to the downside. But really nothing unless you really have some kind of a huge credit crisis. I don't think something can just get annihilated like that and just move into a straight line to the downside. You're going to get those rallies down the line, and then we'll see kind of how people behaves one day. But so far, not a lot of buyers coming in the market. Let's take a quick look here at my macro daily list, where I just kind of review and take a look at the large asset classes in here. So you can see the US dollar, and I kind of scan this on a descending order in terms of their RSI strength. So you can see the dollar index is still kind of staying near 103, 104. It's still looking pretty strong here. Mind you, I was expecting the dollar to be even stronger today, with all the sell-offs that we had, but the dollar has stabilized, which is telling me, that we're at a strong resistance in there, and there might be a little bit of a pullback in the dollar. I don't want to get into a big discussion, but there is, a lot of countries around the world suffer because of the strong dollar. I think even including United States in here, and I don't think anybody benefits from this. But so far, it's probably the safest place to be, and that's why this thing continues to be quite bid. But I think we're into some also extreme resistance levels in there, so we got to watch it. The 10-year yield in here has been pulling back today. Today was the first day where you actually had bonds rallying with the stock selling off, which is normally kind of what happens. So I'm going to continue to watch for that. I'm actually long the 2-year and the 10-year, and those are a little bit more defensive plays. And just kind of betting on the idea that, if anything kind of cracks to the downside, at least the market will, let's say, maybe dump dollars and move back into treasuries a little bit and just, create a little bit of a rally there. Or if there's any whiff of the Federal Reserve, slowing down their rate increases, the bonds the bonds will rally quite strongly. Then you're looking at the oil market in here, that it's kind of still in a more of a sideways triangle. It kind of got sold off today. I think the energy play, it's kind of long in the tooth. I'm going to maybe show you a chart if I have it, where the corporate insiders on the XLE, they're actually, selling massively up into these highs on the energy play, and that's something to definitely keep an eye on. Gold, there's no safety there. We continue to kind of correct lower. We're near about 1850. Then the SP 500 is making new lows, breaking below 4,000. And then you're looking at Bitcoin that just today, after, it's been hovering a long time near $38,000 level, it broke below 33, 31. I think it touched briefly, just slightly above 30 in there. And it's, it has a pretty kind of bearish outlook in here. But again, we're in some strong support, and I'm going to show you this in a second. I made a video on it for the pro room this morning, where I take a look at some of the counts that we had, we had to change and just kind of adjust a little bit in here. But we're coming to some strong support, and we have a gap to fill at about 36,000, which could be, a rally that could be unfolding here over the next several days. But it is a market that's been, that finally kind of started to move along with the rest of the risk assets. So, here is Bitcoin at sitting at about 30,900 at the moment. Let me just kind of hit off a refresh and see how it looks. Yeah, 31,217. So we're pulling back slightly. Here is a big support level. You can see it from back in, the spring of 2021, between May and July, where this level tried to get cracked about, 4 or 5 times, and they couldn't do it, and they rallied to new highs. Here we are coming back, testing it again. The 200-week moving average is climbing higher, sitting about 21,900. And in case we're getting a larger sell-off, this will likely get tested at about 22. So the charts are looking pretty bearish, on the candlestick patterns. I talked about those on the monthlies as well. And, just on the video that I've done on Saturday, Bitcoin and Ethereum and Elliott wave analysis. So check that video on YouTube there. But, it's right now we're sitting at support. So it's important that this one holds for this market to be able to kind of reverse to the upside. There is a count where this could be just a very simple WXY or an ABC here, and you can start to push to new highs, but it's very, very early. We're going to have to wait for some daily formations in here to take shape, a little bit of a recovery to kind of gain more confidence in that. I wanted to kind of run you quickly here so you can see gold sitting at about a 50-week in a pretty big rejection here from a 2078 high. So not a lot to do in gold at the moment. You're looking also at the S&P 500 that I just touched on. Then that's the dollar up into the resistance levels up in there at about 103, 104. Starting to pause here on the weekly. You can see how the momentum in here is starting to slow down. So if we're managing to kind of stay like this week, create a little bit of a doge in there, the next week we're probably going to be a sell-off down, and we're going to relax the risk assets. I think that's what's going to happen here with the dollar. So we're paying kind of close attention to that. And here are the 10-year yields at about 305 at the moment. So, okay, let's jump over to my next chart in here, which is just taking a look at the main markets. The S&P 500 coming down. It's still, on the weekly basis in here, it still looks pretty bearish. Again, I'm looking at this decline as being a kind of a corrective move against this trend, but it's still very, very short. It's still very early, and we're going to be looking for signs of recovery. But for right now, there's not much happening there other than some possibly some support levels from back in May 2021. You can see it right back in there, those couple of candles, plus these levels from February. So we're coming into the next level, into the SPY, right, 3900, and those could offer a bit of a resistance. Taking a look at the Dow Jones, which, it's looking bearish, but not as bad as the SP 500 does in here, as it's trying to crack below this support line. The 200-week moving average comes in at about 282, so plenty to go if it really wants to. The momentum is clearly kind of pushing lower in here, and then we're looking at Russell, which has been the one that's been kind of beaten down a lot, sitting at about a 200-week moving average. Historically, this is a good place where you can get a bounce. I mean, in the pandemic, you just kind of slushed right to it, but there could be, along with these resistance levels prior now becoming supported by 166, I think we're coming into, a little bit of a bounce here into the Russell. So pay attention between here and 160, 164, maybe another, 15, 20 points to the downside in here on IWM, and then a possible recovery higher, maybe back towards 180 in there. So that's kind of what I'm seeing here. The Qs, have been extremely negative and one of the most kind of hated sector. Coming into some interesting swing lows in here, again, back from March 2021, the swing from August 2020. The 200-week, it's further down still at about 257. So, definitely a market to watch, but no indication yet of a break. Let me see how the RSI looks. It didn't even get that oversold. So, all right, the next one in here is NDX. So this is the Nasdaq 100. I wanted to show you this right there. The larger stock in the Nasdaq, the first 100, which is, I wanted to show you a little bit of the breadth on there. We're taking a look at the percentage of stocks above the 200-day moving average. 10% only above the 200-day. These are massive levels, massive support. I mean, you can see back in 2020, we've hit that. Back in December 2019, right here at this low, right? You were back at about 10%. Back in 2016, you were near 11, 12%. Back in, 2011, back in 2008, 2009, you were at about 6-7%. So we're coming dangerously close to some big exhaustion levels into the breadth percentage of stocks above their 20-day moving average. So it's very important. These are large levels in here. I think the market could actually squeeze higher from here. So let's just kind of pay attention to that. Percentage of stocks above their 50-day moving average sits at about 8.5%, so even lower. And look at these big swings that we've had. Same stories back in 2020, back in 2018, 2016, back in 2011, where the market kind of did some extremes on those, and this is where we are one more time. So let's pay attention to those. Usually the markets can reverse from these levels. There's a couple of things. I'm not going to talk about the rest of the breadth. And then here is, in terms of volatility, where we are into the NDX, starting to crack through some higher levels in here. We're becoming a little bit extreme towards 40 into the NDX, which is, again, some extreme levels in here combined with those percentages. I think there's a good chance that we could pull back from here. The volatility sellers here will show up. So unless we have a major credit event where the markets actually, spike higher, I mean, this went up to 79 and then quickly flushed everybody out. It's possible, but, I'm willing to kind of take the other side and just assume that, they will start to jump in because the premiums here are way too juicy not to take advantage of them. But anyway, it's a dangerous play. Be very careful. But we're towards some extreme levels into the volatility index of the Nasdaq. And then if you take a look at the VIX of VIX, And this is, I don't know if I talked to you guys or the guys in the program, here is volatility of the S&P 500, which is actually surprisingly, it hasn't been pushing that higher, right? With the S&P making new lows in here, VIX has barely made a new high, right? So you can see we're diverging here between the S&P 500 back up into 37, into the sell-off in at the end of March. Right now, we're just kind of barely back at about 34 with the S&P 500 kind of cracking lower. So this is an interesting signal from the VIX coming in the market. Also, take a look at the VIX. So this is the volatility of the VIX, which is not that high. I mean, we're back towards 3475, but this index is just barely at about 125. So, there is fear out there, but, at the less degree. Right? The moment we're kind of going lower, people start to, at least, the VIX market is telling you that there is not that much aggression underneath the surface. So we gotta pay attention. Gotta pay attention to that as a sentiment. All right, here is a quick look at the corporate insiders into the XLE. I mean, these guys, I know this rally basically, the markets have been bullish into the XLE since the pandemic lows, right? It's been one of the best performing sectors into the S&P 500, and it hit extreme levels back in 2021. And it's been, the level has been rising, and we're at some, super high elevated levels here, 123 for the corporate insider sells. So I doubt that this market will be able to survive, such a high level of selling from the insiders. Every time we've kind of gone into those levels, looking at this back in 2014, even back in 2018 in here, you kind of went back down. So this is a little bit extreme. Pay attention here to the XLE, because those guys are starting to get beer muscles and they think that this thing cannot reverse. So pay attention to kind of what's happening under the surface. Now, really quickly, we're going to have a bunch of Fed speakers tomorrow. Everybody expects them to be hawkish. Maybe we sold off in anticipation of all these speeches that are happening tomorrow, and we're finding some lows. But I think we're going to get a bunch of information tomorrow, and then on Wednesday we have the core inflation. So that's going to be the next trigger for the stock market in here. If we're kind of coming back down towards 8.2, maybe below 8, that would be, I think, a pretty bullish signal for the market, because it's going to give the Fed a little bit of a pause, a little bit of a reason to say, we don't need to hike that aggressively. We can relax a little bit. So this is going to be a big number that's going to be, that's going to come out at 7:30 my time, 8:30 Eastern on Wednesday. And, guys, just a quick update in here. I've just wrote another quick piece for the pigeon and the statue. This is my latest article. Markets used to be more fun. And, it's a small 5-minute read. Go ahead and, have a crack at it. It's, kind of fun and interesting. So hopefully you can find something useful in there. I want you to, check it out and subscribe and, share it around. I'm trying to write more as much as I can. And we'll get into some more market details with charts and stuff like that. And, I'm just trying to kind of keep it light for the moment. But basically, markets used to be more fun in 2020. Right now, we're kind of running for the exits in here. And just when that happens, the markets have a tendency of turning around. So we'll pay attention to that. But anyway, listen, thanks for watching. I appreciate you being here. Oh, one more thing I wanted to kind of show you before I lose you was the natural gas market. Look at this guy. He's been selling off like crazy from $9 in the nat gas. Here is one of the things from the insiders in our pro room. You want to hit a home run trade, scan for nat gas shorts, one trade here, and you're off to the beach for the rest of the year. We did short natural gas. I got out a little bit earlier than I should have onto this one, but this came exactly as he was hitting about 9. It was just extreme up there. You could see a nice 5-wave advance in here, and kind of what usually happens in nat gas. These are markets that don't give you a lot of time to kind of get in a retracement, and it just kind of cracked it lower to $7. So if you trade futures, some of the stuff, it's quite fun. And this is, some of the updates in the pro room, where I kind of post stuff about, just a bunch of different things in here, right? So, All right, guys, I will leave it at that. I took a little bit of a loss on Bitcoin because we entered at about 36.6. I took that as a long trade, just in terms of the sentiment, because I saw that the markets was not really responding to the downside along with the rest of the markets, and I just took a quick sentiment trade, higher, but I got stopped out today at about 32. No big deal. We make it up with the net gas and some other trades that we're doing. So, it is part of life. But I'm not going to touch Bitcoin for right now until we're getting more signs of lows or something that's going to look more interesting in terms of even some Elliott wave setups. But again, I appreciate you being here. Talk to you soon. Thanks. Bye.